All right, we're not gonna waste no time at all. Let's get right into it. So this is the strategy that you would probably end up paying for, but I'm gonna give it to you directly for free. So right here, as you can see, this is when I had first passed my challenge with the strategy. I had 100% win rate. I ended up literally not losing one single trade. As you can see, the first trade that I took was $2,200. Next one was 18. Next one was 2,000. So I was killing when I had first learned the strategy. This was the moment where I was like, oh my gosh, like I can really make some money in this thing. And this is after like 70 blown accounts. And so if you've been in that season, in that situation of multiply blowing accounts and you're just like, yo, I'm sick of this, I got you. The strategy is completely for free. So what I had ended up learning in my journey here is that I had a great strategy, but I had bad psychology. And so if you can see, I'm on this crazy win streak. When I tell people I was on a big win streak, they wouldn't believe me, but here's the proof. I was on a crazy win streak, and then the tariffs hit, and I crashed out and blew my account. And so I had a great strategy, I had a great system, but my mindset couldn't shift when the market got crazy. And so that's what I want you to learn from me as you learn this strategy. If you hit a losing streak, you don't have to try to get your money back that day. It'll take time. So the strategy ended up getting me my first payout, and as you guys can see with my express funded account, I made 10-10. There's something symbolic in that, I believe. It's gotta be something. It's gotta be something. But this was a good feeling to get my first payout after putting thousands of dollars in the market, in prop firms, and just really trying to figure this thing out. And so I was able to get 10-10, and it was really, really awesome. So once I lost my account, as you guys can see right here, they gave me a new account, and I ended up passing one and passing another one. So we're at 7 total. We're just gonna keep going. We're gonna keep stacking. So this strategy that I'm about to give you guys for free, I was charging $400 for it. I just really felt like God told me it was time to give the strategy away for free. So I did that. I gave the strategy away for free to my Discord first. So I needed to make sure that the 80 people in my Discord had this strategy for free first. And so once I did that, they were very grateful. And one person, as you see, even requested that we would link twice a month because it's a healthy community. That's what this thing is all about, healthy community. So enough with the plugs. I taught my Discord for free. Now I'm teaching you. Are you ready? Let's get into it. So the strategy, it is 3 simple steps. First thing that you're gonna do, you're gonna identify the big pushes in the market, AKA supply and demand. Next thing that you're gonna do is you're gonna wait for a break of structure caused by an order block with fair value gaps. That's very important. Not just any old breaker structure, but it's caused by an order block with fair value gaps. And then you're gonna enter at the order block that caused the breaker structure. So the stop loss has to be below or above the swing point. And we'll get into that right now. So breaker structure, a real breaker structure is not when the wick closes above the wick. So imagine this is a swing point. I tried so hard to do a diagram, and we'll go into the live market in a little bit, but imagine this is a swing point right here. This is not a breaker structure if the wick closes above the swing point. A real breaker structure though is when it completely closes above. Some people call that displacement. Some people call it a whole bunch of other things, but we're looking for the big push. And so a real breaker structure is not the one on the left, it's the one on the right. Please take note of that. And so in order to trade what we call order block liquidity, which is, I don't know if I've heard anybody talk about order block liquidity before, but it is my bread and butter. And in order to trade it, you have to understand market structure. And so let's go into it really quick. So as you guys can see, price is down, up, down, up, down, up, down, up, right? And then it goes down, down, up, down, goes up. So the line right here indicates a breaker structure. And so what I want you to do is to identify the next breaker structure. And if you know about breaker structure and stuff like that, you can skip to the timestamp on the next part and get straight into it. So that's the next breaker structure. All right, when's the next one? That one. Okay, where's the next one? Psych, change of character. So change of character, I call it a breaker structure on both sides, but you know, if you've learned from somebody else, you would know that change of character is just when it goes into the opposite direction. So there we go. Break a structure, break a structure, break a structure. That's what I call it. Okay. All right. So our entries are always going to be external. So if you know anything about displacement, if you know anything about inducement, if you know anything about premium and discount, we're always going to trade in the discount because that's where a majority of our trades are going to be at. And so you're looking for external order blocks to be able to place your trade. And so as you guys know, we trade supply and demand. That is the key here. That's literally, you trade with the banks. That's what supply and demand is. You trade with the banks. If you're not trading with the banks, then I don't know what's wrong with you. So, but if you do trade with the banks, you're a very smart person. So supply and demand example is when the price could be ranging, then it drops, shoots up, then drops again. Second example, price is ranging, shoots up, drops, shoots up again. Literally, to keep it super simple, supply and demand is just when you see a big push. And so we're going to go into the entries. And so a typical supply and demand entry is going to be where price drops, shoots up, drops. And so we're typically entering up here at the top, which is in discount, which will be the order block. Don't get confused. We'll go through it in a little bit. And so that's a supply example. A demand example is the same thing, but the opposite. A big shoot up comes down, big shoot up. So that's literally how it goes. So with supply and demand, like I said before, we're trading order blocks that have fair value gaps. So with supply and demand, the way that we do it is, like I said before, you have to have an order block, but it pushes with fair value gaps. So that's very important. And so fair value gaps, if you guys don't know, the way that I like to say is where price is going so fast that it leaves what is called imbalance, insufficiencies, whatever you want to call it, gaps in the market, and price has to fill it. So the thing about fair value gaps is we don't know how price is typically going to fill it, but the rule in trading is that if there's a gap made, it has to get filled because there's money there. The way that it can get filled is price will either tap it, shoot up, it'll fill it completely to tap into this, which we call the order block, and shoot up, or it would just fill it and keep going in the opposite direction completely. And then the same thing for here. But the example that I like to use is that price is going so fast. Imagine you're down here, you're running, and you drop money in your pocket, but you keep running. You're like, oh my gosh, money just fell out my pocket. I see it, let me go get it, boom, and let me shoot the direction I was going. Or you can say, shoot, let me grab it and then let me go the other direction. So literally keep it that simple. That is what a fair value gap is. And so with order blocks, it's the same thing. So you're running so fast that you're like, oh my gosh, I got money up here, I got money down here. Let me go get it and then shoot back down. Let me go get it and then, you know, shoot back up. So that's literally what an order block is. Let's keep that thing super simple. Don't overcomplicate it. Not that hard. Okay, so here's the big one. Fair value gap liquidity. So we just went into fair value gaps. So my theory is that fair value gaps and order blocks have become so popular that the market makers use it as a form of liquidity. So maybe you've heard of support and resistance liquidity. Maybe you've heard of trend line liquidity. I'm telling you, there is fair value gap liquidity. There is order block liquidity. And so you can see the perfect setup where you see a big push and price will literally look like, yo, come tap this fair value gap right here. And what will happen is it'll completely fill it, tap that order block and shoot down. It'll do the same thing with a buy example. And so once you're aware of fair value gap liquidity, you can understand how to trade order block liquidity and be able to really master the market and not take crazy losses no more. And so same thing with order block liquidity. The market makers, they set up this thing where they're like, all right, if we can get people to take the most recent order block because they want to be impatient, they want to get money quick, they try and get that dream car, they, you know, tried all these things and it's not working, we're going to crush their soul. And so essentially what happens is price will shoot down. It'll come back up. It'll even reject off a fair value gap and then shoot down again. It'll even break structure, bro. And you're like, yo, price never hit this order block. Maybe it's going to hit this one. And what happens is price comes up and you think it's about to reject. You entered and then you get clapped, and then it hits this original order block, and then shoots down. Has happened to me so many times in the market. And this is what I was selling $400 for, because I believe that a lot of people don't know this. And when I discovered this by just looking at the market and realizing, why am I losing? I was like, man, I can make some money off of this. But God told me otherwise. So same thing with this. So price is pushing up, creates another order block. And then you're like, yo, pushes up. Dang, that jump broke structure. Comes back down to the original order block and then shoots up. And it's like, dang. So you want to be able to enter off the external price. And so I'm going to give you guys a live example of something that I had previously recorded. Please excuse the microphone quality. It is trash, but I want to be able to, give you guys what I did for the course. Hey, real quick, if this video is helpful so far, please consider hitting the like button, comment, and subscribe. And I promise you, you will obtain profitability very, very soon. Hey, we also have our online Discord, where the Discord is completely free, but we do have a paid service as well, to where you can trade with us in the morning, and that price is only $60 a month. If you do want a one-on-one session, I'm charging $500 for it right now, and then we have a 4-week mentorship. So if that interests you, let's jump right into it. Please watch these live examples, and I'll see you in the next video. Okay. All right, so the first thing we're doing, as you guys know, if you follow, you put that 14 EMA on, you make sure that you are set with that. You put your kill zone on, make sure you're in the time frame. This is my Asian session right here. If you can trade this literally all sessions. I do Asian in New York, and then I trade gold, and then I'm only on the 5 minutes. So that's literally what I'm doing. And the most important one right here is, so I don't miss any fair value gaps, is I'm putting my SMC structures and fair value gaps on. That's literally what I'm doing. All right, so let's look for some setup. So first thing that I see off the bat is I'm looking for this big push right here, right? So I'm looking for a big push. I see a big push, but I see price came down. It actually came to this order block right here, but I like the opposite colors because it just brings some clarity to it. Because for me, this is all gonna look like one big move. So what I see is price pushed off of this area right here, and it made a big push, broke structure right here, big push, fair value gap, left an order block, and what are we doing? We're looking to enter. So let's see what we would have caught. We would have caught a 1 to 5. And so my typical target right now is a 1 to 4, but you would have caught a 1 to 5, and that's beautiful. So essentially what happened too is, this is the most important part just of trading and understanding like liquidity and stuff like that. If you were to enter off of this order block right here, you would have literally became liquidity. And what price actually ended up doing is it went to this order block right here. So a lot of this stuff is going to be in my course, just to, explain how do you not become a part of liquidity? How do you actually pay attention to markets where you can actually, not lose and stuff like that. But of course you're going to lose, but how do you avoid losses that, are just kind of hard to understand? So some people ask, well, why didn't this order block, work? Or why didn't this one work right here? Why did it lose, And so we explain all that in the course coming soon. So another thing that I didn't mention is, when price is above the EMA, you're taking buys. When it's below the EMA, you're taking sales. Literally, that's why I put it on. It helps me identify the direction of the market, because I'm trading on the 5 minute, right? So that's a really good setup right there. That's actually an A+ setup for me. Here goes another one right here. So we're at this order block right here. You're gonna cover that swing low. This is a nasty move right here, y'all. And this is only for London, y'all. Gold moves. It moves all the time, bro. It moves all the time. So you got this big push right here. You got this order block. And what price did, sorry, you got this big push, order block. Price came down to it. That's a sniper entry. And it gave you a 1 to 5. You risked $100 to make 500. You risked 1,000 to make 5,000. Boom. Easy money. Easy money. Easy money. Easy money. And so this is during New York. So for this one, so as you guys can see, price is ranging right here, right? So it's looking like price is getting ready, the EMA starting to get ready to be in the middle of price. If the EMA is in the middle of the price, you don't trade because you don't know where direction is going. And so I'm just not messing with it. But let me show you an example of somebody losing this, right? So say you took this order block right here and you really liked it. Price would have gave you a little bit of a rejection. So let me break this down. So if you put price at the top of this swing point, right, you would have caught almost a 1 or 3. But if you put it right here, you would have caught almost a 1 to 1. We don't trade 1-to-1s. We're not flipping coins over here. We try to make bank. We try to retire our parents over here, but we try to hustle. So this is an example of if you were to try to capture this swing low right here, you would have just lost. You know what I'm saying? That's okay. You're not gonna win every time. So here goes another example. Here's a perfect example for me. So price, fair value gap, fair value gap. You got this big ginormous push. And so what we're gonna do, we're not gonna enter all the way to low right here, but what we're gonna do is we're gonna enter off of this jump right here. And we're just gonna cover that swing low. And the goal, again, you wanna catch at least a 1-to-4. But you would have caught like a 1-to-3.4. So, you know, that's not bad. You know what I'm saying? Like a win is a win, you know. And how I break even typically is I will just start trailing price. So I'm covering that swing low. Sometimes I'll even drop to the 1 minute. I'll swing that low. So, you know, if price gets all the way down here, for me, this is what I would have saw. I'd have been like, okay, there's an order block right here. Price wants to tap that order block. So I probably would have put my stop loss below this order block. But what ended up happening is price rejected a little bit and then it just went down and it started going down. So that's essentially how you trail price. But yeah, man, what I want you guys to do is I want you guys to start to back test this model. Go over it. I feel like God gave me the strategy and I just want to be a blessing to people, y'all. So go ahead and tap in and I'll see you on the next video. Peace.